Welcome to our channel, everyone. We're diving into the fascinating world of investing today. It's an intriguing universe filled with opportunities, risks, and rewards. As we all know, investing is an essential part of wealth building. Money, when rightly invested, can grow exponentially, helping secure your financial future. However, the question often arises, where should you invest? The stock market, with its age-old reputation, or cryptocurrency? These two forms of investment, cryptocurrency and the stock market, are vastly different yet often compared. Both offer unique advantages and come with their own set of risks. In this video, we'll venture into the depths of these two investment realms, exploring their key characteristics, similarities, and differences. Remember, this content is not financial advice. Always do your own research before making any investment decisions. Let's start with the traditional player in this game, the stock market. The stock market, in its simplest form, is a marketplace for buying and selling shares. These shares represent a stake in a company. When you buy a share, you're essentially buying a piece of that company, becoming a part owner, if you will. But it's more than just a simple marketplace. It's a complex and dynamic entity that's shaped by a multitude of factors. So how does it work? Well, companies issue shares to raise money. They sell these shares on the stock market in what's known as an initial public offering, or IPO. Once these shares are out there, investors can buy and sell them. The prices of these shares fluctuate throughout the trading day, based on supply and demand. If more people want to buy a stock than sell it, the price goes up. If more people want to sell a stock than buy it, the price goes down. Now, what influences these buying and selling decisions? A whole host of things, really. Company performance, economic indicators, political stability, global events. All these and more can sway investor sentiment, and therefore the stock market. For instance, if a company reports higher than expected earnings, its stock price might go up. Conversely, a sudden political crisis might spook investors and cause a market downturn. And let's not forget about dividends. Some companies distribute a portion of their earnings back to shareholders in the form of dividends. This is another way investors can earn money from the stock market, aside from selling their shares for a profit. But here's the thing. The stock market isn't just about making money. It's about funding innovation, supporting businesses, and driving economic growth. It's a crucial part of our financial system, a barometer of our economic health. So, the stock market is about trading ownership in established companies, but what about cryptocurrency? Now, on to cryptocurrency. Cryptocurrency, in its simplest form, is digital or virtual currency. Imagine money, but without physical coins or notes. It's an internet-based medium of exchange, where the value is derived from complex mathematical computations. It uses cryptography, hence the name, to secure transactions and control the creation of new units. Central to the operation of cryptocurrencies is the blockchain technology. Picture a ledger, but instead of being kept in a dusty old book or a single computer, it's distributed across a network of computers worldwide. Every single transaction made with a cryptocurrency is recorded on this blockchain, offering a level of transparency and security that traditional banking can't match. Now let's talk about what drives the price of cryptocurrencies. Unlike stocks, which are tied to the performance of a particular company, cryptocurrencies are influenced by a host of factors. For instance, supply and demand play a crucial role. The more people want a particular cryptocurrency, the higher its price will go. Then, there's the factor of utility. Some cryptocurrencies aren't just digital money, they're also used within certain digital ecosystems. The more useful a cryptocurrency is, the more valuable it tends to be. Lastly, market sentiment has a significant impact. This can be swayed by anything from media coverage, government regulations, to technological advancements. However, it's important to remember that the world of cryptocurrency is famously volatile. Prices can skyrocket one moment and plummet the next. It's this unpredictability that makes investing in cryptocurrency a high-risk, high-reward venture. Cryptocurrency is a whole new way of thinking about money and investments, but how does it compare to the stock market? Now that we have a basic understanding of both, let's put them side by side and see how they stack up. First up, let's talk about volatility. The stock market has its ups and downs, sure, but if you've ever kept an eye on Bitcoin or Ethereum prices, you know that cryptocurrency is like a roller coaster ride. The high volatility of cryptocurrencies can mean massive gains but also substantial losses. Remember, high reward often comes with high risk. Next on the list is regulation. The stock market has been around for centuries and it's closely regulated by government entities. Cryptocurrency, on the other hand, is a relatively new player in the game. Its decentralized nature makes it less regulated, which can be a double-edged sword. On one side, it offers freedom from governmental control, while on the other, lack of regulation can lead to potential scams and frauds. Now let's zoom in on accessibility. You can buy stocks through a broker or an online platform, which can sometimes involve paperwork and wait times. But with cryptocurrencies, all you need is an internet connection and a digital wallet. You can buy, sell, or trade cryptocurrencies 24 hours a day, 7 days a week from anywhere in the world. Lastly, let's discuss the potential for return on investment. Historically, the stock market has provided consistent, long-term returns, although it's usually a slow and steady race. Cryptocurrencies, however, have shown the potential for extreme growth in a short period. But remember, past performance is not a guarantee of future results. Before we wrap up, it's worth noting that you can actually own a piece of the company by buying its stock, which sometimes gives you voting rights in company decisions. Cryptocurrencies, however, represent a digital asset or a form of currency. It's also essential to remember that both stocks and cryptocurrencies can be parts of a diversified investment portfolio. You don't have to pick just one or the other. Many investors choose to spread their investments across both to balance out the risks and rewards. As we can see, both have their own unique features and challenges. The stock market offers stability and regulation, while cryptocurrencies offer high potential returns and easy accessibility. At the end of the day, both can play a role in your investment strategy, depending on your financial goals, risk tolerance, and investment horizon. Always remember, we are not financial advisors. It's crucial to do your own research and consult with a professional before making any investment decisions. So, what are the key takeaways here? Firstly, the stock market and cryptocurrency markets are both platforms for investment, but they operate on fundamentally different principles. The stock market is a well-established system, backed by a long history of regulatory structures and corporate governance. Investing in stocks means buying a piece of a company's future profits, which are typically reflected in the price of the stock. When you buy shares, you're essentially betting on the continued success of a company. On the other hand, cryptocurrency is a more recent innovation, built on the technology of blockchain. It's decentralized and largely unregulated, which means it can be highly volatile. Investing in cryptocurrency means buying a digital asset that doesn't represent a stake in a company or promise future profits. Instead, its value is derived from supply and demand dynamics within the cryptocurrency market itself. Another key difference is the accessibility and trading hours. The stock market operates during set hours, typically from 9 to 5, Monday through Friday. Cryptocurrency markets, however, are open 24 hours a day, 7 days a week. This makes it a more accessible investment platform for many people, but it also means it can be more prone to sudden price swings. Lastly, while both markets involve risk, the level and nature of risk can vary. Stocks can be influenced by a company's performance, market trends, and economic conditions. Cryptocurrencies, however, can be highly volatile and influenced by factors such as technological changes, regulatory news, or even social media hype. In conclusion, it's crucial to understand these differences and the nature of the investment before diving in. Both offer opportunities for significant returns, but they also come with their own unique risks. Always remember, we're not financial advisors. You have to do your own research. Thanks for joining us on this exploration of crypto and the stock market. Remember, there's power when it comes to investing. Be sure to comment and subscribe and bell notifications so you'll get updates anytime we upload a new video.